What a session. 4 minutes to go before the closing bell rings. It's only the Dow that is slightly in negative territory, down at the moment by 52 points. That's just about 0.1%. The rest are in the green on such a busy news day. And let's tell you this, since Netflix walked away from the battle with Paramount Skydance to acquire Warner Brothers Discovery, investors have been Netflix and chill. Thursday after the bell, WBD deemed rival bidder Paramount Skydance's bid as superior. Look at Netflix's stock from then till now, up 17.7%. WBD down 1.5%. Paramount getting the biggest jump here, though, up 31.5%. So which one of these three does today's countdown closer like, and why? Joining us now, Motley Fool Asset Management portfolio manager Shelby McFaddin. Which one are you chill on?
Well, it's going to be Netflix for us. And I think it's for a similar reason for a lot of investors. One, they are now out of this regulatory jungle gym. The co-CEO had said they'd already cleared a lot of things, even if the deal was going to go through. But that's just a relief for investors, right? Just to be out of that sort of hullabaloo. Now, also, they're more flexible to consider either reinvestment internally or other projects. It was a known fact that this would be an expensive, cumbersome venture for them. And so the fact that they had already had plans in place to say, this is how far we're willing to go, this is what we're willing to invest, that's trusty leadership, that's high quality operators. And I think the market has absolutely recognized that. So we're going with Netflix because they've got a lot of capital to sit on, and they're not on the hook to make massive cuts and make any massive repayments in order to continue growing and providing investors with return on the production that they already excel at.
And let's be clear, it's not over till it's over. We still have to wait on regulatory approval, not just from the feds here, but in the European Union and all of the states that may put up a fight for the Paramount Skydance WBD pick. Walmart right now, TJX, you like these two companies. This week we are getting earnings from Target, Costco, similar big box retailers. Give me your sense of where the consumer is at the moment, because we are also getting the retail sales data for the month of January.
Yeah, absolutely. So both Walmart and TJX are in our Momentum ETF, MFMO. And you think about that for a second. In a time where we're really tepid on the consumer, belts seem to be tight, everyone's really anxious. How on earth could you have two retail companies in momentum? And the answer is, once again, operators and value. So we look at Walmart, and what are they doing? They are, frankly, punching up and punching down somehow. They are beating up on grocery stores, and they are picking apart those who can't hang in the dollar store front. They're taking share in grocery, and they're starting to learn the art of the treasure hunt. That is something that TJX excels at. They've been able to pick off customers from the upper echelons who are saying, you know what, I could still afford to go to a Nordstrom, but why not maybe get twice as much? They're able to go ahead and scoop those customers from the cream top while also still offering a value and budget-oriented treasure hunt experience for the consumer who's tightened their belt a little bit. So you have these two companies that are able to sort of take and pluck from the old department stores and the grocery stores that we've become so familiar with. And they're really changing the market in such a way that is appealing to investors that are looking for breadth in a market that's been dominated by tech.
Shelby, good stuff. Thank you very much.